This is going to be a pretty crucial video from the mentor that I'm learning from now. He actually calls this the keys to the kingdom. He says this is so important that it literally can make or break you. Okay, I never realized how much importance it had on your success, but apparently it's pretty much number one on top of the list is money management. Okay, you have to have some kind of money management system in place, or it's almost a mathematical certainty you will go broke if you don't know how to manage your money. Okay, so to quote Warren Buffett, one of the best traders of all times, he's amassed over $100 billion. His number one rule is don't lose money. Okay, if you want to write that down, tattoo it somewhere, put it on your wall. That's rule number one. Don't lose money. Never lose money. Rule number two, he says right here, is memorize, never forget rule number one. I don't know exactly when he was quoted saying that. I believe it was on CNBC one time or whatever. I mean, that's pretty basic. I mean, it's easier said than done. But so what I come up with, and I got this from two different mentors. One of them was a Goldman Sachs hedge fund manager. His name is Anton Kreil. If you want to buy his courses, he's probably going to charge you $3,000, maybe $5,000, just for basic, stock information, how to trade stocks. So his theory is, say you have a $5,000 account. He says you really should not be investing more than 10% of in any investment at any time, whether it's a day trade, whether it's long-term investment, whatever. You really shouldn't be putting more than 10% at one time, especially as a new investor or a new trader, new swing trader. That is what he highly recommended. So you're doing, so you're multiplying 10% times 5,000. That's $500 per investment. And your stop loss, if it goes against you, should be 10% of your $500. So that's a $50 stop loss, and that's saying get out. If it hits that point, you need to have that stop loss in play, ideally to protect you and your money. Okay, now sometimes if you have a small account, say you have a $500 account, that's going to be a lot more difficult because, literally, you can't have a $5 stop loss, or most things are going to, you're going to get stopped out really fast. If you're too close to your price action, most of the time you're going to get stopped out, a high percentage of the time. So I would recommend starting, if you have the means, start with a $5,000, maybe a $10,000 account. I highly recommend a paper trade first until you get really comfortable with this. I'd say at least 90 days, maybe 6 months. I think, most people are going to grasp it pretty quick. And it just depends on your risk, what you're comfortable with losing. You have a $10,000 account, you could drop it down to a 3%, 3 to 5% of your total portfolio balance, $3,000 per investment. A 10% stop loss would be $300. That would keep you relatively, that's not the end of the world. Yeah, it's going to hurt. But, at the same time, you're protecting yourself from losing all your money on one trade, or at least 3, 4, or 5 trades, and that's what most people do is they don't manage their money well. They bet half their money or they bet all their money on one trade, and that's how they blow up their account. So, like for me, I started with $50,000 on my crypto account this year. I'm doing 5% per trade, 2,500 per investment, 10% stop loss. If I lose $250, I try to get out. I have let some of them slip to $500 loss. I'm not gonna, I can't tell you. Sometimes by the end of the week, by the time I look at them, I may be down 500, but I try to hold myself to that. If I'm at $250 to $500 stop loss, I got to cut it. I got to get out. My mentor for commodities, he says for every $10,000 that's in your account, you can buy one contract for whatever commodity you're buying. So one contract per $10,000. So say you get up to a $20,000 account. Say you have several winners. Well, now your account's $20,000. Now you can buy two contracts. Say you get to $30,000. Now you can buy three contracts. But now if you get a couple of bad losses and you go back to $20,000 in your account, then you have to go back to two contracts. So, and he recommends $1,000 stop loss on it. So, that's roughly 10% of your total portfolio, which is relatively close to what the Goldman Sachs guy is saying too. So just easy math, that breaks it down where you can at least control it. I wish I had a formula for stocks or crypto like the commodities, but with price per share, everything is so different. It's harder to do with stocks and crypto. So I just use the 10% rule, 10% stop loss. If you have a bigger account, you could reduce that 3 to 5%. I would highly recommend. I wouldn't go much over that until I got really comfortable with what I was doing. I got 12 years experience, and I'm risking about 5%. Is what I'm comfortable investing and this is super high risk with crypto. It's really high risk. I know that, but at the same time, I'm keeping a tight stop loss on it. I'm keeping an eye on it on a daily basis, at least a weekly basis. And I think I have a pretty solid strategy that allows me to maximize my odds of gains and minimize my losses. So just keep all this in mind. If you want to snapshot some of these, save this video. I think this is, according to my mentor, this is one of the most important things you'll ever learn is money management. And as you grow your account, just keep doing that same percentage, 3 to 5%, or 10% if you're starting small. You could work your way up to 25%. Say you have a $500 account, you're almost going to have to go all in, but you could do half, you could do 25%. And like I say, it's not financial advice. This is all entertainment purposes, but this is what I was taught. This is what I've been taught by, two professional traders that trade for a living that have, from 20 to 60, 61 years experience. So if it works for them and they're still in the game, that says a lot, saying, at least if they've been able to stay in the game this long, managing their money this way, that adds a lot of clout and respectability to what they're saying. So I would definitely stick to those rules. Now, so my biggest problem when I first started was I didn't know where to put my stop loss. Okay, so now easy rule of thumb, and I got in this one yesterday. It's called Rollbit. It's a crypto coin. I had to buy it through my wallet, through my MetaMask wallet. I didn't get a great entry. Last night it was above these moving average lines here. So I thought it was going on up, but I may have got in a little early. I may have jumped the gun a little bit. If you go to a Heikin-Ashi setting on these candlesticks, this is all on tradingview.com, by the way. This is what I use for my charting for most of crypto, a lot of stocks. It works for commodities. You can use 3 indicators for free. I love it because you can set alerts. If you have the Pro package, you can set up to 400 alerts. You can see I've got 250 set. So what I look at here, so I'm entered, and I didn't go near, I didn't put 2,500 in this. I think I put like maybe 1,300, something like that, 1,500, something like that. There's still a lot of money, but so I look at this on a daily chart. Click your D up here is daily. That's a 1 day chart. So each candlestick is 24 hours for crypto because it's 24/7. So from my mentor that I learned from, he says you want to go on a 3-day trailing stop. Okay, so but he says if your third day back is, if your lowest point is an inside day, so there's day 1, there's day 2, there's day 3. Well, day 2 is your lowest point right here. And that's what he's calling an inside day. So it's inside of your outside bar and your first bar. So he says if that's the case, you got to go to your next lowest point, which would be this bar right here. So that is my stop loss right here, this point 108.4 or whatever, all these numbers. So I go over here and I select my little, I like this little half horizontal ray thing here. I select that and I come over here and I put my magnet on right here, my strong magnet. That automatically targets your lowest low point when you click your mouse, when you left click your mouse. Click that, it's going to drop that line in there. Then I like to go over here to my settings wheel right here, and I put in my text what I want it to say. I want it to say stop loss. I want it on the right side of my line, so I put it on the right. I want it on top of my line. You can change the color if you want. You can put a coordinate in there if you want to. You can literally, mess with to an 18th decimal place, I think, here on crypto most time. But so I have that in, and I know what it is. I know why I've got it marked. I don't have to guesstimate what's what. And then if I want to, I can double click this line and I can add an alert on here. And I want to say crossing down. So if the price action crosses down that horizontal line once per bar, I want to get out. And I just once you type these in a few times, it kind of auto populates what you use quite a bit. You can call it whatever you want, and once you get it set up through your settings, it'll send you a text message if this price action goes below this horizontal line and tells me I'm stopped out. I should probably get out, or at least cut my losses. So then you could hit create, and you're going to get a little alarm thing on here telling you got an alarm on this now, saying if price action goes below this, theoretically I should get out. Okay, I come over here to my alarms. I don't want that. Here's Rollbit right here, RLB, 1 day, crossing, get out now. If it goes below that horizontal line, I got to get out. Okay, so now it's kind of an honor system. If you don't have an actual hard stop loss, and you really can't do that with a MetaMask wallet yet, you can't put in a stop loss order to automatically get yourself out of some of these crypto coins. If you're not on an exchange that allows a stop loss to be placed, then you don't have any protection. So this thing could fall out of bed, it could go to zero, and I have no protection. I could literally lose all my money. So just know with crypto, there's some things that, it doesn't really apply as it would with commodities or stocks or, things, assets of that nature that you actually can put a stop loss in on. It's highly risky, but so there's another strategy if you wanted to on a stop loss. It's a little more complicated, but you could go over here to your settings, and you go to a average true range, And you're going to want to drop your little arrow thing down, and you want to change your settings on this to, you go to your inputs, you're going to change that to a 3-bar. Okay? So your 3-bar on a daily setting right now is is what it is. Let's see. Let me get rid of this. It'll show up a little better. But so that's 0.0084. Okay. Let's see. Okay, so 0.0084. We'll just round up, or let's go ahead and do 799, I guess. Yeah, go ahead and do the whole thing, I guess. 795. And you're going to multiply that times 120%. Okay, so that's 0.0101. And then I'm going to add that to whatever my entry was. So my second entry was right here, or subtract that from my entry. Okay, so say 0.0101. So technically, if it went from 12,569, let's just do minus 0.12,569.02 minus 0.0101. So that would be an 0.1155 would be my technical stop loss. If you wanted to do it that way, I could do somewhere in here. I think Larry's 3-day stop loss rule is better if you can afford it. I would go back at least 3 days. If you don't want to use this one, if it's going to cost you over your 10% of your stop loss threshold, you could raise it back up to this one, or you could use that one. Theoretically, it's whatever you're comfortable risking on the trade. So that's it's a little bit of a judgment call, to see what you're comfortable with. But like if you go to a weekly chart, risk versus reward on this, well, number one, you're 9 weeks down pretty much in a row. Actually, more than 9. You came down 11 weeks technically in a row. So most of the time, that's due for a bounce. So if it goes back to your previous highs on this, you stand to make 117%. Okay, the way I've calculated that, I use this tool right here, and you click over here, and it come down to your price range data, and I would click on my entry line right here, and I drag up to the previous high line, and so that's right at 117. Right there. If you want to lock that in, you can. You don't have to, but so anywhere from 100 to 117%, is pretty darn good. Your risk versus reward is astronomical. So I mean, let's see. If you want to calculate your what is that? This one? I think it's this one. Long position. Here we go. So you want to calculate your risk versus reward. You go to your long position right there off of this. Click your little arrow here to the side. Click your long position. And you want to click where you entered in with your left mouse. Click that. And then drag these up to here. Drag your line up to here. That's your reward. Your green. And your red here is your risk. So I'm dropping that down to my stop loss. No, actually it'd be this line right here. So roughly you have a 10 to 1. You look at your risk reward ratio, you have a 10.81 risk versus how much you're going to reward. So I mean, in most cases, if you can get a 4 or 5x ratio, that's a home run. Now your weekly is going to be a lot better than your daily because I mean, there's no guarantee it's going to go back to this high. It could take it, 9, 10. It could take it a year, 2 years to get back to this, level. But at least your risk versus reward is very good, where you're not risking a whole lot of money off your stop loss, and you have a high probability of making a sizable amount of reward. So basically, you want to make sure the juice is worth the squeeze. If you're going to cut an orange in half or a lemon in half, you want to make sure it's a juicy one. If you're going to do the work and risk the money or invest the money in it, you want to make sure it's a decent quality trade. And that's one way that I was taught to at least evaluate whether or not you're doing smart trades or not. So just keep that in mind. And some of these little tricks of the trade are, it takes a little while to get used to them. Once you use this TradingView, like I said, you can set up a free account. You can use three indicators for free. I'm going to try to teach it as we go, as much as I can. Everything that I know how to use, that I use on a daily basis. On here, I love setting up the watch list. You really need good watch list. So, like for me, you can color code stuff. My red list is a lot of, like economic, indicators from the Federal Reserve or whatever. My blue, I used to do, day trade stuff a lot. If I show up like that, you need to just close them out. But, my orange list is stuff that's pretty hot, that I'm watching. I may or may not have, a standing bid on it. My portfolio, most of the time, is stuff that I'm actually in. Now, sometimes if I'm, really watching something, I'll put it on my portfolio list just so I have easy access to it. Like Starbucks, I'm watching Starbucks like a hawk. I think if it gets above a 93.15, that's confirmation on a buy signal for me. That recently, I pulled it up on a scan today using that TD sequential symbolic, and by the certain rules that I've learned, that's confirmation. If it gets above that 93.15 on a daily basis, if it closes above that, you have a high probability of this thing coming back up here and hitting this 109, 108, 108 at least. There's no guarantee. I mean, last time that you hit this 9 count here on a weekly chart, it bounced right at 20%. Right off of this right here. So, it doesn't guarantee it's going to do it again, but probability-wise, there's a pretty good likelihood that it could. It's a decent company. I don't think Starbucks is going out of business anytime soon. I mean, I know my wife is hopelessly addicted to it, so I'm pretty sure they're going to have decent earnings. They may have missed a little. I don't know. I think they have earnings coming up. I use finviz.com for that, and you just go over here and type in S-Bucks or Starbucks if you want. Look right here, January 30th, after market close, what that AMC stands for. So after 4 o'clock p.m. Eastern time, they're going to report their earnings. They're beat up pretty good over the last 90 days or so. So there's a good chance that now you get a lot of pop-up ads on this FinViz. I don't really like that, but for the month they're down 3.4%. Not terrible, but for the year they're down almost 14%. So they pay a slight dividend, 2.5% dividend. Everybody knows who Starbucks is. I mean, they've got pretty steady product, I would say. So and you can get analysts, expectations if you want to. You can come down here and get, what some, Zach's, he's always, coming up with, his opinion on different things. You can see, what he thinks about it. Read his forecast. Current level reflects a downward revision of 2.3%. It's not great. So I would probably wait to buy in till after earnings. Most time, if you try to buy in before, you're guesstimating whether they're going to be right or not. And most time, you're better off just waiting until the earnings actually come out, and then wait for some kind of little correction, or buy the dip, or try to, get some kind of Fibonacci level or support level to try to buy off of. That's what I like to do. That's what I was taught how to do, how to play the earnings game. So just keep that in mind. I'm watching this OHI. It's on an 8-count weekly, coming down. It's super undervalued. But it does have a head and shoulders pattern here on a daily chart that if it breaks, and it's already broken it, so technically you could come down to this 27.14 on this one. It pays a really good dividend. It pays like a 9% dividend on OHI. It pays a 9.27% dividend. They're a real estate investment trust that invests in healthcare facilities, mostly hospitals and assisted living facilities. So they're going to report their earnings on February 7th after market close. So keep that in mind. I think they're a decent company. Not sure why they're selling off so much. You never know. I mean, probably earnings related, most likely. MicroStrategy, I'm keeping an eye on them. On a weekly basis, I mean, they're only on a 3-week down. So ideally, I'd like to see that at least on a 7, 8, 9 count. Could come down to the, I use this Ichimoku cloud system a lot, indicator. And you'll notice this white line I put here, this trend line, is at the top of this cloud. And so a lot of times it'll come down here and barely touch the top of the cloud, and then it'll rocket right back up. Ideally, I mean, there's no guarantee. I put my Fibonacci retracement on here, and the 786 is around this 397. So I'm thinking anywhere from 397, could be a 400 round number, 373. And MicroStrategy is heavily invested in Bitcoin, so it's gonna kind of relate to what Bitcoin does too. So I'm watching Bitcoin also to try to play this. But I could have a standing. I could throw a standing bid 303, maybe some 373. It's 303.83. That's the bottom of the cloud right here. I doubt it cracks that, but it could. There's no guarantee in any of this. But they have a lot of Bitcoin, and if Bitcoin rallies, this thing is going to explode. Last year it did, I think, over 300% gains on MicroStrategy. You can see it went from whatever this is, 314 to over 700. Let's see. What did it do? 85% year. That's not year to date, but performance in 12 months, 85%, almost 86%. They don't pay a dividend, but it's super high P&E ratio. And they're going to report February 6th also. So I'll definitely keep an eye on that. There's a lot of speculation, analysis. Most of it's going to be wrong. Your professionals, they're rating it anywhere from 520, 430, 180. Well, that was in 22, so that's definitely not even in the ballpark, I wouldn't think. But 490 to 430. Can't remember what fair valuation was on it. I was using another tool. It's called Wall Street, or no, Simply Wall Street, I think is. Yeah, they come up with a fair value of 616.61. It's almost 27% undervalued according to that. So, it's fair value right now, but I think you can get it cheaper if you wait another 6-7 weeks. Just keep it on a tight watch list and keep an eye on it. That's what I'm going to do. You might only get a 3 or 4 week correction, and then it rallies right back. If Bitcoin takes right back off, you're gonna take right back off, I think. But so anyway, just keep an eye on this stuff, and hopefully that'll help you manage your money a little better and keep you out of trouble. That's half the battle, is just trying to maintain what you have and not overexpose yourself in a bad trade. So if you like this content, hit the like button, hit the subscribe, share it with your friends and family, share it on social media, and try to get the word out. And this is going to be part of my trading course that I'm going to offer out once I get my website up and running. I thought I'd leak out some of the free content. Just people can be learning while I'm creating my website. Just get you started even that much faster, hopefully. So, well, in this video, keep it hopefully short and sweet, and catch y'all later.